Hey, this is Angela Powerhouse Williams, and I just wanted to make this really quick video because someone in the group asked about they were having trouble drawing consolidation boxes, I'm assuming. So I just want to shoot a quick video to show you how simple that is to do. Keep in mind that in order for you to really see whether or not the market is ranging or trending, make sure that you are zooming out of your candles. So literally go up to the top and hit the magnifying glasses at the top to minimize, okay? It's so much easier to see a trend. If you look at this, you can see this is an obvious trend to the downside, and then you can see the obvious consolidation areas. So that means that literally when the market is in consolidation, do not trade. You don't trade at all in a consolidated market, okay? But you won't know it unless you zoom out. If you zoom in and you make your candles big, this consolidation area right here looks like it's trending, but really it's choppy. It's going up, down, up, down, up, down. You get what I'm saying? And so if you're trying to trade this, especially with the candles moving over the moving averages, you may get a little bit of success, but it's like a quick scalp because you have to literally get in and get out. And you will be wondering why this is happening. And that's because the market is choppy, but you cannot see it because you got your candles enlarged. So make sure you go to the top, use your minimize little eyeglass here. And now you can see it. It's clear as day what is happening in the market. Let me hide this right quick. All right. So if I wanted to draw a range and see, I'm going to put it right here. As you can see, you already got your supply and demand boxes. They should already be on your chart. You got your Fibonacci pivots here, which is going to help you with take profit. Unless you manually draw your fibs yourself, which you could do, okay? But these are still going to help you gauge. You already know that usually when price action crosses above and stays above this blue line, it tends to move toward the resistance levels. When price action is below the pivot line, it usually continues to flow until it touches one of the red support lines at the bottom. Okay, so you got your supply and you got your demand boxes. Now your demand boxes are in green. I'm looking at NASDAQ, so obviously if I'm looking at this, I don't see any green boxes. That means that there is no proven demand area at the moment, okay? And so all I'm seeing is red, which means these are proven resistance area, meaning when price action come up in these boxes, it tends to reject higher prices, okay? And then you know that your white boxes are zone areas of potential resistance and support, but it hasn't been proven yet. That means it hasn't been touched enough times and been rejected to turn into a red or a green box. Now, price action actually treats these white boxes as magnets. So that means that price action could literally go up to retest these areas, or it could go down and retest this area. Obviously, it's not a lot of volume in the marketplace, so I really wouldn't be trading. I only trade in high volume time frames. But if I was really looking at this, I would probably think that, you know, the market did a whole lot of dropping today. So it does need to push up a little bit, but I wouldn't be surprised if at some point of time it goes down and tests this area, only because this is a white box and it's on a, I think this is a take profit. This is a critical point that I think I had mapped out from before. So I have a critical point here that's also overlaying a support. line. So I'm getting double confirmation right here, and then triple confirmation because I even got a white box. So I think at some point it'll come down and test this area before it possibly make a move on up and re-hit these areas. So very quickly, how to draw a consolidation box. Okay, so what you're gonna do is, I'm gonna use this one right here, even though I got boxes here, so it'll be kind of confusing because you got all these boxes on your chart. But what you wanna do is you wanna go up to, let me see, is it insert? Yes. You wanna click on inserts, and then you wanna click on shapes. And after you click on shapes, you wanna click on rectangle. Now keep in mind, you can only draw an accurate consolidation box if you zoom out your chart, because that's the only way you're gonna see it very good. So I'm gonna say rectangle. And literally what I'm gonna do is I'm gonna go off of this little area of resistance right here. And I'm going to pause it, like I'll probably go about right here. All right. So this is what I would do if I was drawing. Now, as you can see, there were candles that poked out the top of it. What you are looking for in order for you to enter a trade is you need it to do more than just poke out of the box. It needs to come out of the box, come back down and retest the top of this box, and then give you a wick candle, a bullish white wick candle off this box to indicate to you that price action is about to push up. Okay. Now this one was actually a good move, and they literally used it to trap people. I like to look for large engulfing candles. I'm gonna zoom in a little bit more here. Okay. You see this candle right here? This was a nice indication that price action was probably going to go to the upside, and people might have did a buy because it did break out solidly out the box with a nice engulfing candle. I like to see nice engulfing candles. Now, the only reason why I would have hesitated to take that trade is you see this 50 moving average. It's real close to this 50 moving average. Always remember, when the market has been in a trend, candles are always going to retest these moving averages, and it's a high probability that it will bounce off of the moving average and continue the trend to the downside. So even though this was a long engulfing candle, I still wouldn't have gotten into the trade. One, I got a moving average right here. Also, I wait to see what the second candle going to do after the breakout of the engulfing candle. Okay, so in order for me to actually go in with a buy, this second candle would have had to stay bullish. Like it might have been a little bit of red, but maybe turned around, and it needed to cross above this engulfing candle. And that's and by it crossing above this engulfing candle, it literally crossed above the moving average, which means it broke it. Okay, that will be the only way I would be interested in doing a buy. Okay, now if you get a bullish engulfing candle, it's going to be a little bit closer here. So if you get a bullish engulfing candle, and then the next candle, it probably started bullish, but then it came down and it became red. All right. Well, that's your signal that, okay, I'm not going to go long just yet. Okay. Because this is being rejected and you got your moving average. So the only way I would consider is this candle here, this third candle would have had to come up, swallow this red candle, and break above both candles and this moving average for me to believe that this resistance area has really been breached and price action is about to go up. Okay, now it didn't, it was rejected, and it's continuing the trend. Now here's the bottom of my box. I'm still in the zone, I'm not doing anything. I got a nice engulfing candle come out right here. Came out the box, the consolidation zone. All right, now I'm excited. So let's see what this next candle going to do. Well, this next candle popped up just a tad bit, but then when it fell down and stayed below this engulfing candle here, I would have shorted. Okay, and if you short, you would have caught that continuation breakout trend. Okay, and as you can see, it always retests some level. It came back to a box. It came close to a critical point line that I had drawn. Now, keep in mind that even though we use our critical points and we do have our pivot lines as our gauge for us to hold on to a trade, especially when it's going in our direction for it to hit the lines, but sometimes they will stop about maybe 10 to 15 pips from your critical point and then do a reverse. So always be prepared. Sometimes you may not hold out till it hit the line, but if it come within 10 to 15 pips of your critical point, start looking for a potential close and taking the profit, okay? So zoom out again. So we got our box. And this is basically letting you know consolidated areas. Don't trade consolidated areas because it's choppy. You're going to keep in, it's going to keep going the opposite direction. All right. That is the fastest way to lose money, is to try to trade a choppy market. But again, if you got your candles big on your screen like this, you might not visually catch up on the fact that it's choppy. Okay, so you're trying to buy and you think it's gonna keep breaking out and then it fall back down. Or you buy, get here, and it fall back down. You can't really see it as good, okay? So the best thing you could do is zone out your charts if you wanna win more. Now, you can clearly look at this here and see that in this area, the market was literally in consolidation for all this time period. So again, if I want to draw a box, I'm gonna go to insert, I'm gonna go to shapes, I'm gonna go to rectangle. I'm gonna take this high point here because you can see where I got multiple candles that pretty much stopped at around the same price action. So I'm gonna draw my box. Uh-oh. Come on, range box. Sometimes it sucks, but here we go. I'm gonna draw it here. I'm gonna go about right here, where areas where I got multiple candles that are kind of stopping in the same area. You know, so right up in here, you see how these candles are all kind of stopping in the same area. So I'm right here. So again, I need long engulfing candles for me to even consider a potential trade of a breakout. You need the engulfing candles to validate the breakout of a consolidated area, okay? So if I zoom large, I'm in consolidation, right? Well, since I'm in consolidation, people will make the mistake, they'll jump up in here. Okay, even though it's under the 200, but they're like, okay, we see the 8, the 21, I see the 50, and these candles above, I'm gonna go buy up in here. Don't. Just avoid all the noise and all the nonsense. Because if you just sit back and be patient and wait for a real breakout, when it breaks out, you're gonna make the money. You're gonna make the money, okay? So these candles broke out, but then you see how these wicks. So it didn't stay a large engulfing candles. It has to stay in a full body. You don't want to see any stems. If you see stems, that's letting you know that lower price action is being rejected. So obviously you wouldn't be shorting just yet. It's not time. But as you continue to scroll to the left, what do you see here? You see a giant engulfing a body that is out of here, okay? And so this was your confirmation that a breakout had happened, but you want to get in the best position. So you don't short here just because that's where it stopped. You want to keep this price in mind, but you want to see what this next candle does. This candle opened, but it became bullish and it moved up. So you're like, okay, that ain't it. Once you got to get a bullish candle that's going to stay below this line. I don't even know if I can, let me draw this here. Price action got to stay below this area. It did not go. Why I keep moving, y'all? It won't let me be great. Okay. So price action has to break that from that big old long engulfing candle, full body, no wick. When price action break that, it's going to continue to fall. You see it. It fell. They went up. This right here is a little teaser. What they were doing is they was trapping people. People thought that, uh-oh, it's pushing up. It's done. And it's going to keep going. So people did buys right here. And they got trapped. I always believe that solid candle and just wait. And it went from here all the way down, all the way down. And that's the result. Okay. And then you had a breakout here, continue to go down. It hit our critical area and it hit a zone point. It's doing like a little bit of a pullback. But like I said, I would be interested in seeing if price action comes down here. Because literally it's just choppying around. This is sideways too. It's just choppying around. It's not enough volume to push it through or push it down yet. So don't do anything. So I hope this helped the person who was asking about making sure that they knew how to draw their consolidated boxes correctly. And I know somebody asked, do people use another platform other than MT4? I'm sure that there are people who are maybe using other brokers that may have their own platforms. I have MT4 and I also have TradingView, and I have brokers through TradingView as well. Now, TradingView is just not probably, but TradingView is a more advanced charting tool. But these indicators that you have here, you can't import them into TradingView, but there may be some indicators within the TradingView library that can get you close to it, okay? But I do like this. I mean, because this is where my broker is. It's kind of simple. I will tell you that the price action, regardless if you're using a MT4 chart or you're using a TradingView chart, the price action is the same. So it's not like it's not going to be a difference in price action or the movement in the market across brokers. All the price action is the same. It's just how you want to see your chart is depending on what platforms you want to be in, okay? There are people who might use TradingView for their charts and they still take their trades through their MT4, okay? And again, some people may have brokerage companies through MT4. I like Hugo's Way because Hugo's Way is the best as far as leverage is concerned. A lot of the Forex brokers through TradingView do not give you all of that leverage and leeway. So, and some of them are US brokers, so they really are more strict on the leverage. So Hugo's Way, as far as a broker, I feel is still the best for me. TradingView is more advanced. I do like their their chart system, but either way, I like them both, okay? So we'll see whether or not price action come down here. Like I said, I felt like at some point it'll come back and test this area because I do have a critical point that was drawn off of the daily. There is a white magnet box over it, and there is a pivot support area as well. So it could possibly push down before it makes its way back up. Because remember, everything that goes up will come down. And everything that go down will go back up. So I hope I answered your question, and I hope that helps you. And you never know, we might get this move I was telling y'all about. All right, happy trading.